Well, hello everyone. Today I'm going to talk about the top industry that you guys need to focus on right now. And you guys are going to be very surprised when I tell you all about it because I've got some amazing news to back up my data. Now, earnings are almost over and I've been following earnings substantially. And as far as the biggest standout sector, it happens to be the technology sector. Fourth quarter results account for we've got about 90% of the industry out right now. Tech companies are up about 23%, and they're outperforming the rest by a huge margin. Now, I took a little deeper look inside to see which of the subsectors, if you will, are outperforming. And guess what I found? I found that the biggest moves are in the chip sector. Chip sectors are up over 40%. Now, I want to read something important to you, and then I'll go through some charts and give you some data. But right now, technology is right behind energy, and energy is still in the rebound period. Let me show you the chart on energy. Look at a 2-year chart of energy. Look at where we were before the breakdown in February. This is February this is when the COVID occurred. We broke down, then we went up, and we broke down all the way in energies to 23. We're at 50 right now. But look at technology. Let me show you a 2-year chart. This is the breakdown right here. We were at 102. We're now at 138. So technology has been just saying, bye-bye, COVID. We're way past it. And again, the biggest outperformer in technology has been the semiconductor sector. But there's something more under the hood, and I need to expose you to it right now. Now, here's what you need to know. President Biden plans to sign an executive order in the coming weeks to authorize supply chain reviews for critical goods like semiconductors. The White House press secretary, Jen Psaki, said the administration is, quote, identifying potential choke points in the supply chain and actively working alongside key stakeholders in the industry and with our trading partners to do more now. So this is coming down the pipeline. In a letter to a consortium of U.S. chip companies, and this is who made up the consortium, Intel, Qualcomm, AMD, and so on, the big companies. They asked Biden for substantial funding for incentives for semiconductor manufacturing as part of the economic recovery and infrastructure plans. That's huge. So there's a shortage, and the new chip fabrication on the horizon are grounds for Bank of America, which is really big on the semiconductor sector, to give positive reviews on the semiconductor equipment as a favorite sector for the coming year. That's right. According to Bank of America, in our view, semiconductors are the leading arms dealers, leveraged to secular trends while still trading at compelling 20 to 21 forward PE ratio. So there's value there. Below market multiplies despite solid earnings per share growth, which is what I talked about in the earnings review. Its report comes following incremental demand as the chip industry tries to alleviate the shortage across computers and automotive markets. And automotives, car sales are up 167%. And everybody and their mother is trying to do everything digital with cars. So chip self-sufficiency will be very important to every country in the coming century, as self-sufficiency in iron, steel, and energy were before. So this is becoming a basic material. We're starting to see chips move from tech to basic materials, and that's huge. That means it's becoming a commodity. And when something becomes a commodity, it becomes very valuable. Currently, there's a painful distribution to the auto industry due to the chip shortage. Everybody's making electric cars. Everybody's making self-driving cars. Everybody's making autonomous cars. Chips, and more chips. EV. Anywhere you look, it involves chips. So there's a painful distribution to the auto industry due to this chip shortage. Europe is looking at building advanced logic fabrication to cut reliance elsewhere. Japan is pursuing greater insourcing. And China could keep sending more than $10 billion in wafer fabrication equipment as it keeps working on leading edge logic memory capacity. So as you could see here, chips are not going anywhere. They're just literally becoming a part of our culture. Literally, we're going to be using chips. We are using chips for everything. Think about it. Zoom, software, the cloud. How would I be able to do this all without chips? And the more advanced the world becomes, the more valuable chips will become. So chips is what's running the let me give you an example. Let me show you something interesting. This is QQQ, which is the NASDAQ 100. Notice the trend, and this is the top 100 NASDAQ companies. Now look at SMH. SMH is the semiconductor index. It tracks semiconductors. Look at this. It's outperforming. It's literally outperforming, and it's making higher highs. And it's not seeing the level of divergence that we are seeing with the QQQ. Let me show you why. Higher highs. This is the index. Higher highs. Lower highs. But if you look at SMH, you will see that, yes, we are making higher highs, like way, way higher highs. But if you look at the divergence here, you will see that it's kind of moving sideways, that it's not really doing anything. See how the line is moving sideways? It's going up, it's going down, but it's higher here, it's just as high here. So it's sideways, where in the QQQ, it just goes down. Higher price, lower indicator. That's not good. So the fact is, semiconductors still have substantial upside and can withstand a correction, whereas the overall tech industry, I'm not so sure about that. So that's why I want to talk about today about 4 leading semiconductors that are on my radar and are part of this report. And these are all part of the stocks that are showing substantial shortage in this sector. So first is Applied Materials. This is a big, big company. 5-year return, 534%. Applied Material, modifying materials, atomic level, industrial scale, customers to transform possibilities. This is a huge, huge, huge. What do? They create wafer fabrication. Big, big company. One of the biggest in the industry. Huge market cap, has been around for a while. What's the stock doing? Following the SMH semiconductor. This is the SMA semiconductor index. And you could see here, Applied Material. Next one, so that ticker symbol AMAT. Next one is KLAC. Optical instrument lenses. What do? Develops equipment and services through the electronic industry. They're a chip manufacturer. Flat panel displays, printed circuit boards. 1-year return has outperformed double what the NASDAQ has given us. 5-year return, 400%. It's almost 100% a year return. How is it looking in terms of trading? Let's take a look. Look at that. Just like the SMH index. Look at that. Nice little round top there. Maybe a little overbought short term. I would probably wait for a little pullback. But man, oh man, this looks great. And look at this on a 5-year basis. Look at that. Since the COVID started right here. Same thing with Applied Materials. Look at this long-term chart. Look at that. Just goes pow and just comes up. Next one, LRCX, Lam Research. Semiconductor wafer fabrication. Are you seeing a pattern here? Again, look at the 1-year return, 75%. 5-year return, over 100% a year. And technical chart, you're going to love this one. Look at this. It's up 8 points pre-open. Look at that chart. And if you look at that short-term chart, again, exactly like the SMH. And again, you can just buy the SMH ETF and be done with it. But if you want individuals, here they are. So that was KLAC, then LRCX, Applied Material, finally Teradyne. Teradyne, what do? Instruments for measuring and testing electronic equipment. But when it gets down to it, leading supplier of automation equipment for tests, industrial, semiconductors, used to test semiconductors, wireless products, data storage, complex electrical systems. Folks, trust me on this one. This is what they do. 1-year return, look at this, 94%. 5-year return, over 100% a year. Trust me, this is definitely a semiconductor stocks. Matter of fact, I would say these are 4 of some of the biggest ones. And again, look at price action of these all 4 stocks. They're literally tracking each other. Look at this. Let me just go to shorter term. So here's Applied Material, here's KLAC, here's Lam, here's Teradyne, and here's SMH. And again, the profile for it, for the semiconductors, ETF, it's an ETF technology. It's not really technology, it's semiconductor, listed semiconductors. And here are the constituents in case you want to get on the full at TSM, big one, Intel, AMAT. AMAT, get it? AMAT right here. Let's see here, LRCX. LRCX, you see that? Let's see here. All of them are in here. All of them. Here's Teradyne. And where's LRCX? LRCX will be right there. Here's LAM. Here's Applied Materials. Here's KLAC, and here's Teradyne. So if you want to do it all in one basket, SMH is great. If you want to do it in 4 baskets, you got Applied Material, KLAC, LRCX, and Teradyne. And those are the 4 biggest ones. And I'm telling you folks, as I'm sitting here right now, when Biden signs this executive order, there's going to be some upside in chip stocks, and this demand is not going anywhere. And I hope that helps.